it has been extremely difficult to get conventional lending along the way. You can only go so far with debt service coverage ratio lending as well. It all has this cap. So I realized I needed a way to still continue to grow my business and expand where I was at.
From cornfields to high rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
Ethan Montang, welcome to the show.
Thank you so much for having me, Neil. I appreciate it.
I'm excited you're here. Say for the audience to say, who are you? Where are you from? What do you do?
32 years old. I'm a single dad. I've been investing. I bought my first rental in 2016. Started with single family and flipping. And now I pretty much solely focus on multifamily, commercial. And I bought my first business recently.
Bought your first biz. Yeah. We got a lot to unpack there. Take me to the beginning. Tell me about the very first rental.
First rental was in Ames, Iowa. It was a house hack, very typical, traditional way. Didn't buy it right, but ultimately I lowered my expenses because it was a 3-bedroom, 1-bath house. I rented out 2 of the bedrooms to my buddies. Lived in 1 room and therefore wasn't paying rent anymore. Yeah. So I didn't buy it at the right price. 2 or 3 years later, when we finally sold, I sold it for like $1,000 more than what I bought it for. So, but I got out of renting for that year, those years. So.
What led you into that particular purchase? Was it you going to school in house hacking, or was it an actual true, the intent being, I'm an investor, let me buy this?
Yeah. So I used to wrestle in college and I got hurt. My scholarship dropped out, went to Europe and traveled. And when I came back, my dad was like, what are you going to do with your life? I was like, it's a great question. So I was thinking about it one night and I was in my car and I heard a Fortune Builders ad come on, come to this free real estate course. And it was just like, there was something in my head. I'm a Christian. I don't know your faith, but something spoke to me and was like, as long as nothing bad ever happens, the population will never decrease. And therefore people always need places to live. So that was kind of like, okay, I'm just going to call this number, go to this free course and just see what happens. Well, at that course, I learned about Rich Dad, Poor Dad, read that. And that was, 11 years ago. Yeah.
Okay. So you go past the first rental and start flipping from property.
Yeah. I was very slow.
Flipping and keeping at the same time.
Yeah, exactly. Very slow in the beginning. I only did a deal every year for my first 3 years. Well, single family, duplex, first flip, all in Ames, sold those 4 units and bought 15 units in Boone. And that's kind of where it ramped up from there. I think that was about 2018.
Hey, Iowa investors. This is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
What did you learn flipping houses?
That I wasn't as skilled it wasn't as easy as they make it seem on YouTube and Instagram.
You're telling me it's not as easy as that the HGTV 22-minute program
episode,
they make like 80 grand.
Yeah, right? What are they doing? They do it in 45 minutes. It's out here taking me over a year.
Yeah,
so I'm doing something wrong.
Yeah. Were you doing everything? I guess, how'd you run a project?
I got lucky enough to stumble into my still to this day business partner, Shannon, and he is just a phenomenal artist. He is so skilled and talented. Water boy work and all the demo and stuff that looked cool on Instagram because I make content myself. But then the real finished work I left to him. And we met in 2017 and have been together ever since. Yeah.
So you bought some multifamily in Boone. How'd you manage it?
Managed it myself. It was difficult in the beginning, but QuickBooks, some of these apps, they help, but there's not, unless you're paying for someone to teach you how to learn them, or YouTube, It was very difficult. So I made a significant amount of mistakes as a property manager. However, I read this book, Landlording on Autopilot by Mike Butler.
Yep.
Completely changed how I was managing my properties. And that made the, continuing forward a lot simpler.
Give me 2 or 3 things. Why did it completely change?
So I look young. I'm 32. My company's Young Pro. I started studying real estate at 21.
And you look young today.
And I look young today. So thank you for that. Yes. Right. So I very quickly realized in this real estate game, I was significantly younger than a lot of the people I was interacting with. And I didn't want to be judged, or especially by the tenants too. Younger investor or established investors can look back on themselves and remember, oh, I was young too. Yeah. I know what that hunger is. He's one of those kids. Well, a tenant, they don't have that same mindset, and they think you're just born into money or some rich kid or just whatever scenario or story they make up in my head. Yeah. And I knew to eliminate that was just to not identify myself as the owner. Correct. So that's one thing I stopped doing a long time ago. Yeah.
I learned that same thing from the book. Yeah. You're always the property manager, right?
Yeah.
Never the owner.
Yep. Never the owner.
Yeah. What software system were you utilizing to help manage at that time?
QuickBooks was the only one.
That's it.
We have moved now to Appfolio. Okay. I do think it's a bit better. But I didn't even have a way to track like conversations with tenants. It was all through email. Yeah. And then it moved to texting. And I was like, oh God, should not have given my tenant my number to 15 tenants. A lot of those things now are huge factors into where I'm at. When a situation will arise, I can remember, oh, this is the reason why I don't do it this way. I operate and navigate different now because of all the mistakes I made in the beginning. Right. So I'm thankful for them.
Yeah, they're tremendous learning lessons.
Yeah. What about you? Give me one of your learning lessons or your favorites from the Landlording on Autopilot.
It's been years since that occurred. The biggest one is that never give them your name. Mm-hmm. That would also, to take it one step further, never buy a property in your name. There's lots of reasons not to do that. Mm-hmm. But of course, put it in an entity name so you can have a further degree of separation. I recall years ago buying one of my first properties and putting it in my personal name at the time, because I got better loan.
Mm-hmm. Terms.
Yeah. And so a neighbor hated it, and the fact that it was for rent. So I literally get harassment calls from a neighbor.
That's ridiculous.
Yeah. And so then I was like, all right, we're going to fix that.
Yeah.
Quick claim deed it over.
Yeah.
Get a new company name. And then,
nobody knows. Yeah.
Mm-hmm. Yeah. Privacy goes a long way.
It really does.
One of the things I liked in the book a lot, which is a great segue for what you do today, is providing your tenant multiple options at the time of renewal. So at the time of renewal, it's, if this applies, right?
Yeah, right. If this applies.
You've been a fantastic tenant. We want to offer you the optionality to extend. And I mean, it'd be 3 different options.
Yeah.
1 year, 2 year, 3 year.
Yeah.
And they have 3 different prices associated with them. Here's your monthly rent.
It's a beautiful thing.
One of the things that you do, I think is super interesting, is when you're buying properties today, you like bringing multiple options to the table.
Correct.
Yeah. Talk a little about that. And then I want to go into something specific that you've done so we can actually put some context.
Totally. Well, I quit my job in 2019 to do real estate full time. It has been extremely difficult to get conventional lending along the way. So
they love it. The bank loves to see a couple of years of W-2s, and then past that, if you're in this biz, they want to see tax returns and everything. They want to see a track record of dollars coming in.
Mm-hmm. And you can only go so far with debt service coverage ratio lending as well. It all has this cap. So I realized I needed a way to still continue to grow my business and expand where I was at. And so what I realized was I didn't have the luxury to buy with conventional lending, but I needed to figure out if a seller would still be willing to it. What I didn't want to come in was just instantly be the guy that's only buying on contract, even though that's what I do focus on. And that is my goal. Because I am capable of buying other ways. It's just, how do I have to structure it? Who do I have to bring in as a partner? All these, different scenarios. So what I realized was, well, why don't I just every single time I encounter a deal, whether there's an agent involved or not, right? Now, I may have to communicate more with the agent on why I'm presenting it this way. But if they're not involved and it's just me and the seller, I'll give them an all cash offer, which will be the least priced offer. I'll give them a bank financed offer, which will normally have the worst terms, like 75-day closing, or, so I put terms in there to deter them specifically from that one. But that is the middle priced offer. And then the highest priced offer is always my seller financing offer, which is as close to what they want as possible to what I need on the backside.
Yeah. And what you need on the backside. Let's talk through, give me an example of a traditional seller priced deal. It's $100,000. That's what the seller wants. So let's talk through what some of those terms might look like.
Well, you have, I think, 5 negotiating things. So we already went over purchase price. You have down payment. You have balloon, the amount of time before you have to pay them their lump sum, interest rate, and amortization schedule. You can also even get more creative and start tacking on, well, do we want your payment type? Is that loan or is that interest and principal or is it interest only? Do you need 4 months before you need to make your first payment? And is accrual of interest going to happen in that time? I mean, you can really get so creative.
You forgot my favorite one, which is principal only.
Oh, yeah. No interest, but just principal payments. Have you done one of those before?
I have.
I've done one as well.
I did one on an 11-year fully amortized loan, principal only.
Principal only.
Yeah.
Wow.
Still on our books today.
Okay.
Yeah.
Commercial property?
No, residential.
Residential.
And
was it a big value add?
It was, I think we put about 8 or 10 grand into this thing and then turned around and sold it on contract.
Wow.
Took a down payment. I think it's the interest rate on the contract's like 9%.
That's amazing.
9%.
Yeah.
So I got and our down payment, I think I gave like $140 for it and $7,500 down.
Yeah. 9% interest is nice too, since you have 0.
Yeah, correct.
Yeah.
Tremendous. We're going to go down why structure these and a couple of things, but let's answer the big thing because I know some of the audience are going, this sounds crazy that this is even possible, that anyone would ever do an 11-year fully amortized loan, that anyone's ever going to give you germs. But so let's talk about that. Why would a seller do this?
That's a great question. I get this all the time. And I think people's minds are a bit too conditioned to be able to understand there's much bigger picture. Capital gains, everybody knows about that one, right? And that's a huge thing people like to avoid. But the other thing that people forget about too is when that money comes in, it also raises the income bracket that you're at. So that's 2 different massive fees that you're going to encounter. You don't have to pay capital gains for anybody listening. If you're trying to buy a property from somebody that's their primary, they don't have to pay capital gains anyways if they've been there for 2 years. So that's a great question to ask when you're talking to sellers, as if this is their primary. Well, when it's not, right, you have the boosting of the income bracket as well as the capital gains. Then you're left over with a much smaller finite amount of capital. Well, prior to that, they then have a much larger lump sum where they can lend to me at, most of the deals I'm doing right now are at 4%. Now, we do know that you can take it to a bank and get about 5.5, depending on where you're putting, that capital. Sure. However, that's at a smaller amount because they just paid capital gains and they just paid that. And then it's the whole process too. Whatever 5.5%, that's not paying them monthly. And it's education. So why would a seller do that? Because they don't have enough education. And when you educate them, there's tons of benefits that go for both parties.
Oftentimes you end up with a down payment. They know, like, and trust this asset, right? Oftentimes they've owned this asset for years. In fact, nobody knows the asset better than them. It doesn't matter what it is, right? Whether it's a business,
a car,
whether it's a multifamily.
Yeah. You can seller finance a car.
Sure. Yeah. There's a whole bunch of reasons. Another one is going down this as is path. Why would somebody sell a home as is? Why would somebody sell it for cash? Why would they sell it at a discount, quote unquote, right? Oftentimes because money is not the greatest motivating factor. There's a slew of other benefits. Time, the fact that you'll buy it full of crap. Yeah. Right? 100%. You can buy a hoarder house full. Yeah. Realtors aren't listing hoarder houses.
No, they're not. Yeah.
Right. So there's lots of reasons why somebody would end up doing it that way.
And if you don't perform, they just get their asset back. Sure. Yeah, they're in the same position as a bank would be. So it's like you listed, they get a down payment, they get monthly payments. If you mess up, they just get the asset that they know best back anyways.
Right. Yeah. So when you're going through educating somebody, it seems like, they're going to have a range of questions because you've provided them options. You've given them 3 years. Just like going back to my lead into this, when I give somebody a tenant option of 1, 2, or 3 years, oftentimes they get questions coming back, right?
Yes, sir.
And so it's part of educating them along the way. So I'm curious as to what percentage you make 3 offers to one person at a time. How often are they going in bucket 1, 2, or 3?
So first, I'll still do that even when it's a seller financed offer, right? So the first, when I listed those out, was to figure out if they would do seller financing. Now, if I already know that they're willing to do that, it'll be the same thing. It'll just, those couple different offers will be seller financing offers. The closer you get to I'm huge with relationship. The closer you get to the seller, the less people involved, less heads, less agent, whatever it is, if you're being a good person and giving them what they want inside the offer as well, you're much more likely to get that. But in the beginning, I don't know, 25% maybe.
Yeah.
I was putting out, but just like you got to put out offers to, but 1 out of every 4 offers is that they're okay to do seller financing. That's a great ratio to me.
Yeah. It's incredible.
Insane.
Yeah. All right. Tell me about one deal. Just pick a deal.
Pick a deal.
A deal that you can actually talk about, because I know we've talked about it.
Yeah, a couple.
But in previous weeks when we connected, we talked about a whole host of deals that are in the pipeline or in the works.
Yeah.
So I know.
Okay, I got this vacant building one time for $50K.
Okay.
This was actually my 0% interest deal. It got brought to us by our church. And this goes to just speak about telling people what you do. Because there is no way we would have gotten this deal unless people in the church knew we had started. And I'm not saying brag. It's just get out there. What do you do? And then when the other person asks, well, what do you do? I'm a real estate investor. I flip houses or whatever it is. So our church brought us this deal. Completely vacant. Nobody had been in it for 6 years. I was like 14,000 square feet or something like that. I ended up putting the terms together, and in Grant Cardone's 10X book, it was, if you buy anything cheaper than what it costs to build, you always be in a good spot. There was, I believe, like 78 windows in this building that were all brand new vinyl. So at $400 a window, we were looking at like $45K in windows alone without the building. It took me 10 months to clean it out, do some like painting a few places, figure out how I was going to build my first proper pitch deck. I went to the RIA and like stood up in front of everybody. It's like, this is the deal I got. But 10 months later, I sold it. So I bought it on seller financing the whole time, sold it 10 months later for $149,900. And I only put in, because my payments were going to principal, so I still got that back. I think we put in less than $7,000 into the whole thing of dumpsters and, other stuff along the way. Yeah.
Incredible.
1031 that into a 6-plex in Ankeny. And I went to my agent. I think I was 25 years old. So I was still a very new investor. And I went to him and I was like, hey, I can either let you get your 3.5% on this, or I'll give you 40% of whatever I make on profits. But from here on out, you and I are business partners. We got to take all the money that we make from this and roll it into the next one. And you and I are going on a journey together. And he's about a decade older than me. And his name's Dustin Kupka. I don't know if you know Dustin.
I certainly know the name. Yes.
Yeah, good guy.
I bet it's been a heck of a journey.
Yes, it has. And that was in 2019. Yeah.
What got you attracted into the multifamilies over the singles? Because you made that pivot pretty quick in your career.
Yes. My second property was a duplex. Cash on cash. I'm a pretty big nerd with Excel. And when I just did the math on my first duplex, okay, I'm going to still live in here. I'll still rent out a room in the unit that I'm on, and then I'll rent out the whole other unit. It just became a much different. And I was like, oh my gosh, it's all about multiple doors in the same location. Makes debt service much more reasonable.
You bought a business.
I bought a business.
Tell me about that.
So I bought a bar in Ames. Big shift. I've been an entrepreneur, not in a you've got to be here at this time for a very long time. But when I looked at the numbers, 2 years ago, I bought a 57-plex for $2.4 million, and it net cash flows $124,000. Bought the bar for $1 million, so significantly cheaper, and it cash flows $270,000. Also less than 50% cheaper and over double the cash flow. Hired a completely new team, got 6 new bartenders, found a new bar manager. He'll be taking over at the end of September. And this is just my next step into creating financial freedom for me and my family.
When did you buy it?
The official license transition happened 2 weeks ago. I took over about 3 months ago.
Okay. No,
because liquor licensing transfer.
I'm generally curious because I've heard about bars in the past. Did you buy a business or have you bought yourself a job?
That's a great question. To be truthful, for the past 3 months, I bought myself a job. But my reasoning behind that is I didn't think anybody would respect their boss that doesn't know how to do their job. So I knew I'd have to go into this grind season until I found a manager. But then what I didn't want to happen was find a manager right away, hire him, and then he's shit and I fire him and I don't know how to train the next person. So now if it's a terrible manager, dude, all right, you're gone. I control my schedule anyways. I'll come up to the bar until I find a new manager and then I'm on to the next one. So I bought myself a job, but here at the end of September, I'm confident in the person I hired and the new girls I've got on the team that I'll have bought a business.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Going through this experience, what have you learned about yourself as it relates to hiring, training, ultimately investing in people?
I'm not as systematic as I should be. I've done really good with being creative and pivoting and being able to adjust very quickly in difficult situations, but I'm not as systematized and organized as I should be, which is what initially drew me to the business. This is like a way for me to learn because of the previous owners. They kind of took me under their wing. We'll show you rather than you just buy this and, kind of go on. So in that moment with just how I'm training people, I have way I'm typing down to give to my managers. Like, this is how you train them. Right. So it's just repeatable. Both of them. The business is helping me better as a real estate investor. The only reason I was comfortable even buying the business is because of the knowledge I have as a real estate investor.
How's it helping you become a better real estate investor?
You get so used to only dealing with real estate investors or a very niche people. And then when you deal with your tenants, you're used to that, right? You're used to that shift. But now in the bar, people think I'm just a bartender. They have no idea the circumstances. And it just lets me be more genuine and become a better listener. And I care about just the same way I did with real estate, but it's not always about, I guess I'm still cracking a beer and making money off it. True. But just being present with what the people are saying, because that's all they want. Just like the tenants want to be heard from their landlord. Correct. And the sellers want to get what they want from the buyer. The bartender wants to talk about his life problems to somebody that's there to listen. All the same game.
Interesting. Tell me about that on contract with terms.
I didn't.
Oh, no.
I built it around. I didn't
know where you were going. I thought it was going to be amazing.
I built it around terms initially, but the seller actually went through something and gave me an opportunity. And he was like, scratch these terms. If you want to do a cash offer, I'll give you a significant discount. And I was like, okay, you haven't seen my office yet, but I have an office downtown Des Moines. And the seller of the bar was also the seller of that warehouse. Okay. And I bought that on contract, which is what led us into the situation with the bar.
It's funny how those things roll.
It really is.
The dominoes go. What are you most excited about in the next year?
Becoming a better leader. I've been really good about my readings every day again. That's been important. And I have, I think, a team that trusts me and my vision. And now I need to continue grinding it out and kind of see where we grow, because we have a second acquisition downtown Des Moines that's coming.
Of a property or
a building and a business?
Both.
Yeah. Okay. We're going after both now.
Okay. Yeah. Well, that could be exciting.
Same guy that's kind of taken me under his wing previously. When you're a younger person, you really don't have much of value besides time, right? You don't have money. You don't have experience. You definitely don't have
time
knowledge.
And energy.
Yeah. So try to connect yourself to somebody who's years ahead of you. And it doesn't care if you're getting them water or getting them coffee or driving them around so that they can be on their phone and do emails. Figure out how to attach yourself to somebody with, that's farther in the journey, and it will skyrocket your progress.
Yeah, there's no doubt about that, to be able to latch onto somebody.
Do you have a mentor when you came?
I've had lots of mentors over the years, and certainly paid to get in lots of rooms.
Yep.
Like you, I'm a big believer in education. So I've consumed lots of books and tried and done lots of things.
What about the reverse side of that? Have you had a mentee?
I would think so. Yes. I used to own a RE/MAX for a number of years as I started my career on that brokerage side of the business, selling houses. And we had a team there, terrific team. And I like to think I attributed to and helped people from nothing. Ultimately, it's their first day in the business. To many of them have gone on to wildly successful careers, owning their own brokerages, tremendous success there.
Doesn't it? Supposed to be selfless, but it's almost a little selfish with how great you feel when you teach somebody something and you see them go out and apply it.
No doubt.
That's amazing.
Yeah. Yes. And then surrounding yourself with people who ultimately, today we've got a killer team. And I think I'm the least qualified person to be here, which makes me feel wonderful.
Right.
When you're the smartest person in the room, you need a new room.
Yep.
Right. Yeah. You could do this, what you do anywhere. For you, why here? Why Iowa?
My son. I won't be here too much longer. I'd like to get my pilot's license. Oh, that's 2025. It's one of the things on the goal list is I want to get my pilot's license.
Yeah.
And there's a place in Boone that does the training and stuff. So I'd really like to do that. But ultimately, I'd like to move, but he's too young right now.
Yeah. No, understand that.
What about you?
For me?
Yeah.
Why Iowa?
Yeah. Why Iowa?
Oh, I love it here. Born and raised here. Went to school at Omaha, played football there. That's how I ended up over there, and then came back here. It's incredible. People are incredible. It's a wonderful environment. You can plan better. It doesn't have the wild swings. That's probably more in line with some of my personality and the ability to plan and execute and work with incredible people.
I know it's your podcast, but I'd love to hear about the first deal that kind of changed your path or when you pivoted, like, I want to do things more like this deal.
So I was in brokerage for lots of years, did very well in my 20s, get to my 30s, and I got a couple of dollars sitting around. And I was like, what am I going to do? I don't understand the stock market at all. And so flipped a handful of homes. And then I was at lunch with my good friend, Cy Phillips. Shout out to Cy. And we were having lunch and he says, you should buy a rental property. And I said, all right, well, I'm going to give it some thought. Then I was at lunch, I don't know, a day or two later with my other good friend. I would call him a mentee, Jason Stuyvesant. Great guy. And Jason says, I got this property. It's coming on the market. Probably not a good flip, but may make a good rental. It's up in Urbandale. He's just telling me what he had going on. I was like, you know what? I'm in the rental game now. I think I decided at lunch, right? I was like, that sounds like one for me. And so, within a handful of days, whatever, it's under contract. And that was my first rental. I remember everything about it. I know that house inside and out. Yeah, right. That went on to about the one next door. And then ultimately, in 3 or 4 years later, I had bought hundreds of houses, both flipping and turning into a rental portfolio. I recall buying my first industrial building, 17,000 square footer. Hy-Vee's a tenant there. Their bakery.
Is Hy-Vee the only tenant?
Yeah. And
are most of your buildings single tenant?
The industrials are.
Okay.
Yeah. Some of the offices, the one we're recording.
Because like this one is multi.
Yeah. Tenant building. In the office side. And so I remember buying that thing, fast forward, 2, 3, 4 months. And I'm like, you know what? I never hear from these people.
This is amazing.
We're the property manager, right? It's straight triple net deal. And I was like, what did I just find? I felt like I found gold or something. I was like, this is so much easier than doing, banging your head against the wall, doing single family C-class rentals.
Yeah.
There's certainly an easier path.
It very much so is.
And so that led to, shortly thereafter buying whatever it is, 8 or 10 or 12 commercial properties. Yeah. Real quick to go, there's an easier path.
Mm-hmm.
Yeah.
Even if they're not multifamily, like that deal that we did and we signed those 10 single family houses that's north of Grand.
Yeah.
Yeah, right. So we got those under contract. But so many investors will be way more attracted to that than if there was the same property count, but they were all over the place.
Scattered
they're just right there. It's
there's no doubt on the single family side. If you can concentrate within a block, within a neighborhood, and you're building a portfolio, your portfolio is more valuable with concentration versus scattered side. Yeah.
Way more difficult to manage.
Yes, definitely is.
Well, how many units do you guys manage now?
20 on the single family, small multi side, and Airbnb. I think it's about 25, and then a few 100,000 square feet on the commercial side. Yeah.
Because you guys only property manage for yourself. You don't manage for anybody. Yep.
Yeah. God bless all the property managers out there. It is a challenging business. I had somebody on the podcast and we were talking on the backside of the podcast about property management and about ownership, investment ownership. And he said, I've been doing this in lots of years. He said, the people who burn out are the people who are the closest to the tenants. And the people who are happiest are the investors furthest away from the tenants.
That's good to know. It's sad. That's sad.
I was like, it's sad, but you and I both bought enough properties direct from the seller who are property managers who own their own stuff, who are seasoned. And it's 100% true.
It is. It's almost like a natural progression into becoming a tired landlord because you just consume all of your tenants' stress and just issues with their lives that they don't bring that to your employer at work. Why you think you can bring that to your landlord is beyond me, but it happens frequently.
Yeah, it's unfortunate. Oftentimes their problem is now your problem.
Yeah.
Well, the bright side is you have 2 paths to go down. He said there's a lot of happy investors who properly manage and put the right structures in place. Mm-hmm. And that's ultimately what the show is about, investing, not property managing, right?
Yeah, right.
It's just a component of it. All right, you ready for the final 3 questions?
Yes, sir. Let's get to it.
One piece of advice you'd give your 20-year-old self.
Find content like Neil's to educate yourself, and then go find a seasoned investor and bring them water, drive them around, and spend as much time with them as physically possible.
It's probably the number one piece of advice that's identical on this show is to go work for somebody for free.
For free.
Yeah.
Don't expect to get paid.
Yeah. Multiple people have said what you've just said, and it's unbelievable advice.
Every call they make, just be quiet and listen to. Hopefully they'll put it on speakerphone. If you're lucky enough, they'll put it on speakerphone. And otherwise, just be quiet, listen, and spend time around them. See why they're doing what they're doing. Pay attention.
2 books that changed your life.
The One Thing.
Oh, Gary Keller.
Yeah. Extreme Ownership. That was another
By
really
Jocko.
good. Yeah, by Jocko.
All right, you ready for this one?
Yeah, I'm excited.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. I'll let you define your business however you see fit. What 3 things do you need to know each and every month?
I really like this question. I'd want to know if our debt service obligations were paid. I'd want to know our occupancy rate and probably the cash flow. Yeah. What about you?
All good things. I don't ever answer this.
Yeah, you don't ever get to answer this one. Nobody flips it around on you.
Not that one. No. Yeah. So P&L, what's the rent roll? What do we have vacating?
Yeah.
And then we don't have a report for it, but I got to know how my people are. How are my people doing? Yeah, right. I've asked tons of questions. You and I could talk forever. What's one question I did not ask that I should have asked?
Man, you are good at this. One question that you didn't ask. Maybe like why? Why I do this?
Yeah. That's great. Let's do it.
Retired my mom. When my mom was a boy, my dad was in the military. He was hurt in the war downrange, medically discharged. And my mom had to start cleaning people's houses when he got retired. And so at 21 years old, dad did 32 years in the military, got hurt downrange. Mom's having to clean people's toilets. It's like something's not adding up. So did this all to take care of my mom. Yeah. Only a couple months. So she's down to 1 to 2 days of cleaning a week. She's on payroll for the bar and for the real estate stuff. And hopefully by the end of this year, she'll be done cleaning permanently.
For people who want to find you, they want to follow you, they want to connect with you, where can they go? What should they do?
Instagram, Facebook, YouTube, and TikTok, Ethan Montang.
Links are below in the show notes. Ethan, I appreciate you being here.
I appreciate it.
Thanks, bud.
Thank you.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the 2 of us to get on the calendar and connect. Until next time, keep investing in Iowa.